I've done a fair amount of reverse mortgages, and I feel like I can kind of like dispel the myths of it where people feel like, oh, if I get a reverse mortgage, I lose my house. Totally not true. It'd be the exact same thing as if you got any other mortgage. Do you lose your house if you get a different mortgage? Absolutely not. You have the option to repay a reverse mortgage just like any other mortgage. The thing that's unique about reverse mortgage is that it is optional to make the monthly payment, and then they also typically come with a line of credit. So you'd be able to say you only needed to borrow X amount of dollars. You'd have a separate available fund to borrow from if you ever choose to do so. So those are kind of the two unique factors of a reverse mortgage. One, payment is optional. Two, you have an additional line of credit in addition to whatever funds that you pulled up front. But this gentleman that was talking about it was just basically saying, you're able to take your funds. Let's say you're looking to buy a house with cash. Well, what if you were able to buy that same house or more house if you wanted to maybe buy a little bit beyond your current budget? You're able to control that larger amount of real estate or conserve your capital if you didn't want to spend all your cash by utilizing that reverse mortgage and still not having a payment. So those kind of things, those situational things definitely, made sense to me, and I would bring that up to people as an option. But the way that he was kind of presenting it, was a real motivator to say, what, I should really be mentioning this a little bit more, just because it's not as maybe well known as the standard 30-year fixed.